Hi, everyone, and welcome back. We are joined today by Peter Schiff at Euro Pacific Asset Management and the host of the very popular Peter Schiff Show, and to discuss what is happening in the world. Because, well, from the United States to Europe, we appear to be sailing into an economic storm. And you have been, I guess, one of the leading voices warning about this. I guess you could call it an economic collapse. I thought perhaps a good place to start would be just to ask you how we can understand the bigger picture here, why we ended up in this position, why you feel it was predictable as well.
Well, are you referring to the global trade, problem?
Oh yes, and
Yeah,
well,
well,
and
you know, I
weakness in the dollar. It appears that we're going into some perfect storm here.
yeah, well, the weakness of the dollar is actually not part of the problem, it's part of the solution. The dollar, unfortunately for Americans, has to get weaker. But for the rest of the world, this is going to turn out to be a positive thing. Uh, you know, Donald Trump has picked a fight that America can't win because our entire economy has been built on the foundation of trade deficits and artificially low consumer prices, artificially low interest rates that are all a byproduct of the world using the dollar as the reserve and investing its savings in dollar denominated debt, especially treasuries, mortgage backed securities, but also investing in U.S. financial markets, buying stocks, bonds, and just propping up prices of the assets that Americans own. So Americans on paper have been richer and their lives have been better because they've been able to live beyond their means. Americans could buy things that they really can't afford, that they didn't produce, and they pay for it with money that the Fed creates out of thin air. But the goods that we're getting are not created out of thin air. The companies, the workers that help produce these goods have to work hard to make them. They have to save to finance the capital investment needed to make them. So, the world lives beneath its means to enable Americans to live beyond their means. Now, I think this is the dynamic that is potentially going to fall apart here. Ironically, it's the US that's causing it when it should be the rest of the world, right? They should be pulling the rug out from under us. We're pulling it out from under ourselves. So, to understand what's going to happen, I think, is you're going to see a substantial decline in the dollar relative to other currencies. That's going to limit the ability of Americans to afford imports. That's going to be further limited by the tariffs that Trump is imposing on American consumers who buy imports. And so I think the world is going to move further away from the United States. That will, in the short run, anyway, be to the detriment of the United States that has been propped up by the world. But I think it will liberate the rest of the world. When Donald Trump talked about Liberation Day, it was the world he was liberating, not Americans. The world will be free to consume what it produces and invest what it saves. And I think this is going to be the beginning of a global economic boom when the world is unshackled from having to prop up the United States.
Well, you argue that the dollar weakening would be a good, well, I guess, market mechanism in order to price also, price America into the market, so live within its means. But after decades, though, of the U.S. dollar being exported around the world, wouldn't there be a risk of a massive inflation if all these dollars would begin to be rejected in international trade and sent back?
Yes,
Yeah.
yes, and the inflation is going to take place in America. Yes, because that's where all those dollars come home. Um, it is actually deflationary for the rest of the world in that as the dollar goes down, prices go down for everybody outside of America, right? Because if something is priced in dollars and you're based in another currency, and let's say the dollar loses half its value against your currency, well, the price of the good that you were buying with dollars just got cut in half in terms of your own currency. So it's going to be a positive event for the rest of the world, because what's going to happen is a lot of people who are not buying certain products because they can't afford them will start buying them because they will be able to afford them. It's the Americans who will have to stop buying because the Americans won't be able to afford the higher prices that result from the decline in the dollar.
Well, countries like China recently they appear to be dumping more of their bonds, but the dollar is still used though. I
Yeah.
guess in surprising high rates, it is reducing. But does it surprise you that drop off hasn't been steeper?
Yeah, I mean, I would have expected it to have been steeper over time, but I can clearly see where the wind is blowing now. And, the speed of that wind could easily pick up. So who knows? Maybe everybody is walking away from the dollar right now, but pretty soon they may run away. We'll see.
But the United States government's role, I guess, in the economy, one can expect that as the economy goes south, it will change its economic policies a bit. I see, for example, the United States government taking a greater stake in different companies. So a few years ago, this would have been condemned, and say people would have said
Eh,
the government, shouldn't pick winners, or the government shouldn't own major industries. Now they're almost beginning to copy the China model in some way. I'm just wondering, what were you reading into? Yeah, the U.S. government taking this, ownership stakes.
Well, it's a major mistake. And if it's allowed to stand, it will represent a bad precedent for future presidents that may follow. It's very anti free market capitalism. It is unconstitutional. We'll see if anybody challenges it. I'm sure that if Biden had done something like this, the Republicans would be up in arms. But according to them, Trump can do no wrong, even if what he is doing is very anti capitalism, anti freedom, anti free markets, anti liberty, anti constitution. They don't care. They kind of support Trump blindly. Which I don't like. They talk about Trump derangement syndrome, which is people that just oppose everything Trump believes in or everything he wants to do, and that's wrong. But supporting everything he does, regardless of what it is, I think is also part of that syndrome. Trump is fallible. He makes plenty of mistakes. In fact, he's making quite a few mistakes as president. And I think it's wrong for people not to call him out, especially people in his own party that know he's making mistakes, but they're afraid to speak up because you have so many MAGA Republicans who have, pledged their loyalty or so loyal to Trump that they have the derangement syndrome because they can't see that if Biden was doing exactly what Trump is doing, they would oppose it.
Yeah, this is a problem of political polarization. Either you hate everything the opponent does, or yeah, you have to make excuses for everything your own side will do, which is both very not ideal. But but another area though where Washington now is stepping into, I guess, uncharted territories, also its relationship with the Federal Reserve. Now, I tend to like Ron Paul and those who argue for banning the Fed essentially, but it
Yeah.
now seems that
One
Trump has sorry.
one of the few senators willing to speak out against Trump is Ron Paul's son, Rand. Right? This, that you could count them on one hand. Anybody in the Republican Party that's got any courage.
But what is happening now to the I guess the independence of the Federal Reserve, because we've seen Trump, he asked for the firing of the Federal Reserve Governor Lisa Cook, but overall,
Yeah.
there's this argument that there's a hijacking of the Federal Reserve. How are you assessing this information?
Yeah, well, first of all, I've always talked about Fed independence being more of a pretense anyway. I think that the Fed has not acted independently in the past and has been way too cooperative and complicit in enabling uh, excess government spending, particularly deficit spending. So I think the independence has been more in name only, but at least there's a pretense there, and to some degree, the Fed has a limited independence, not as much as it should, but at least there's something there. But what Trump is doing is tearing apart even that pretense. Look, it certainly looks like Cook technically committed mortgage fraud by listing her second home as a primary residence. I mean, it is something that is widespread in this country. Millions and millions of people have done it. Not that I'm justifying it, just because so many people have done it. Uh, but it is not like a major mortgage fraud. It's something that, if it's discovered, is rarely, if ever, prosecuted, that somebody did that. I mean, maybe the bank would say, "Hey, you got to pay back the mortgage," or something like that. But I don't even think they could probably find an incident where there's somebody who went to jail for doing this. Once upon a time in America, we had something called liar's loans, and the reason they called it a liar's loan is because everybody knew that the applicants were lying, and so they looked the other way. These were mortgages. So if they actually have a liar's loan where you're allowed to lie by definition, and it's the same thing. So look, I don't even know. Maybe she has an explanation for this, you know, but there's no way a president can simply use this as a pretense to fire her, because it's obvious he wants to fire her because she voted not to cut rates. He's looking to remove FOMC members so he can install a lackey. And so he's digging up dirt. And so you have to look at the motivation for this. The real reason he wants her off the FOMC is because of her policy choices. If she was one of the few who voted to cut rates, there's no way this would have even happened. So, forgetting about what she did, it's the substance of why it's being brought up. But, if this is the case, oh, okay, there's mortgage fraud here. Let somebody file charges. Nobody's filed any charges against her. And let's see if they can get a conviction. She's got a 14-year term. She's only a couple of years into it. Plenty of time to get a jury to convict her. Maybe if she's actually convicted of the crime, you could argue that, well, she's a convicted felon. She has to step down, right? I mean, maybe. But just to accuse somebody, I mean, maybe she's got an explanation. Who the hell knows? But in America, you're innocent until proven guilty. And when you have a 14-year employment contract, which she has, you just can't be fired. If, she was an at-will employee, sure, maybe you did something wrong, gonna fire you. Okay, that's your right. But when you have a contract, especially, here at the Fed, those 14-year terms are there for a reason. It's to insulate them from political pressure, right? So they can remain independent. But if all you need to do is a president just digs up some dirt and then makes an accusation, and then he can just fire you, then, whatever, pretense of independence is completely lost. So I disagree with what Trump is doing. I think the courts will probably rule that he can't do it because it's pretty obvious that he can't do it. It's unfortunate that more Republicans don't speak out, because I'm sure if Biden were doing the firing, they would all be up in arms. Truth is truth. It can't be dependent on who's doing it, right? So you can't support it if a Republican does it, but then condemn it if a Democrat does it. That's hypocrisy. You have to be consistent in the law. And again, I'm the biggest Fed critic out there, but I would defend the Fed governors against such an action. And I mean, personally, I think all the Fed members, should be fired for not hiking rates, right? But, you can't do that. But I think, they're complicit in these massive deficits and they've been too easy for too long. Rates are too low. They never should have done quantitative easing. They've made all kinds of mistakes. But I think they'll make even bigger mistakes if Trump succeeds in stacking the FOMC with his puppets and then, gets them to slash rates and start running the printing presses. That's what he wants them to do.
Well, Trump wants to defend the role of the dollar as the world currency, and he makes the point that if the US dollar would lose this position, it would be like losing a world war, to point out the significance. But at the same time, he wants to weaken the dollar in order to price American industries into the market. How do you, I guess, achieve both of those goals?
Of what again? I missed that.
No, he says he wants to maintain or the US dollar as the world currency, because it would be
Oh.
like a world war if he lost it. But at the same
Well,
time, wouldn't he have to take your advice then to hike the rates instead of
yeah, well, if Trump was concerned about preserving the dollar's role as the reserve currency, he would have vetoed the big, beautiful bill because that is a threat to that role. What we need to stabilize the dollar is to get rid of the deficit spending. And so we need substantial cuts to government spending right now. We need to show the world that we are serious about the fiscal position of the United States and our ability to make good on our debts with dollars that maintain their purchasing power. But Trump is basically telling the world, we don't care about the dollar's purchasing power. We're going to create massive inflation to artificially stimulate the economy. And we want the rest of the world to just suck it up and eat the loss. We want the world to hold dollars, even though those dollars are going to lose a lot of value while you're holding them. Why should the world sign up for that? Why should the world agree to accept those losses? So everything Trump is actually doing is undermining the dollar's role as a reserve currency, not supporting it.
And well, one of the great concerns it initially seemed was that the US was losing its competitive advantage. It was deindustrializing, racking up too much debt. But and this was, I think, part of the reason why they began these tariff wars. But today, India walked into, well, they had implemented on it 50% tariff, and but the Chinese appear to have been able to make Trump walk all of this back. How are you assessing the tariff wars? Is this
Uh,
reaching a dead end? Because it seems to be a little bit to restore or give some competitive advantage to domestic industries, but it's also being used a bit for political punishment and yes, a power play. I mean,
Well,
how long can they double down, you think?
well, first of all, protectionism especially doesn't work when the industries you're trying to protect don't even exist. So, these tariffs are going to be very problematic for Americans. They'll be a nuisance for India, but they'll be a huge problem for America because India is in the driver's seat. India is making all the stuff. And if Americans can't afford to buy it because they can't afford to pay the tariffs, well, India just needs to sell its goods to other consumers who don't have to pay those tariffs or allow their own population to buy the products or make different products. I mean, if the products they were making for America, if they're not in demand in India or other countries, then stop making them. Make something else, right? I mean, use your labor, use your factories, to produce other goods because the goods you were making for Americans are now too expensive, so Americans can't afford them. So, the tariffs are on Americans. They're not on India. They're not on China. They're on Americans who want to buy foreign products. And unfortunately, in most cases, Americans have to buy foreign products if they want to buy a product because those are the only ones that exist. And, to the extent that America is no longer competitive in a lot of these industries, which is true, because if we were competitive, we would be making the stuff here, right? We're not doing it precisely because these goods can be supplied much cheaper from abroad. But the protectionist tariffs are not going to cure this problem. All the things that are keeping America uncompetitive are just going to remain, there. We're not getting to the root cause of the problem by attacking a symptom, which is the trade deficits. The trade deficits are symptomatic of the underlying problem. So trying to just stop the deficits with tariffs and doing nothing about the underlying problem just lets the problem get worse. So the tariffs are going to backfire. They're going to harm the U.S. economy, and they're going to make the U.S. economy even less competitive than it is right now.
Well, you were one of the few people who predicted the global financial crisis of 2008 and 9, which began with the housing crisis. Uh, but how would you compare this crisis to 2008? Is this a continuation, or is it going to be worse? Or are we actually heading towards a collapse? I'm just wondering what it might look like.
Well, first of all, we haven't even had this crisis yet. But when we do, it's going to be much worse than 2008. But yes, it is all a continuation of the same failed economic policies, monetary policies, fiscal policies that led to 2008, right? In fact, the current policy mix, the mistakes that are being made are even greater than the mistakes that were made that led to that crisis. So the next crisis is going to be much worse because I think it's not going to be just centered, in the mortgage market, right? This is going to be a sovereign debt crisis where it's U.S. Treasury bonds, right, that are at the center of the crisis and the U.S. dollar. So it's not just a financial crisis. It's a U.S. dollar and sovereign debt crisis. And that has much more profound implications for the economy, for the financial markets, and it also takes off the table a government bailout. The way they were able to mitigate the crisis in 2008 was the government stepped up to bail everybody out, right? But if it's the government that is in crisis, if the government's debt is now suspect and nobody wants to own it, if the dollar is collapsing, the government can't bail out anybody because the government can't bail out itself, right? If no one wants dollars, then what good are printing more dollars? No good. It just throws gasoline on the fire. So this is going to be a much worse crisis, and there are no bailouts. Right? The only thing the government could do is to act responsibly, which is to cut spending and allow interest rates to go up, right? And so doing that means we get a stock market crash, a real estate crash, a bond crash, bank failures. We still get the financial crisis, only much worse than 2008, and no bailouts. So everybody loses, right? And so what we're staring at is far worse than anything that we've experienced in the past.
At last, I also have to ask about Europe, how you're interpreting the situation there, because it seems that on this side of the Atlantic, we are in a worse position. The UK is heading, well, according to the newspapers, the UK might be heading towards an IMF bailout situation. Germany could be in an even worse position unless they find a way of fueling their factories with moral posturing. But they all seem to be heading down. Do you see Europe as being in a worse position now? And uh, again,
There,
what would be the solution to any of this?
I don't think Europe as a whole is in a worse position than the United States, but that doesn't mean they're in a good position. It's just not as bad. I do see a lot of problems in Europe with excess amount of debt. Um, you know, too large a welfare state and governments having overpromised as to what they're capable of delivering to citizens in the way of government programs, especially pensions and healthcare and all the other commitments that have been made that the governments are unable to meet. Right, so there is a problem there. Europe is not going to be immune from the inflation that Americans are going to endure. But I just think that the U.S. problem is more severe right now and may be the one that erupts first because we are running these huge trade deficits. Europe is not. I mean, Europe, overall, their trade is in balance with the rest of the world. So they have not been living beyond their means to the same degree that Americans have. The euro has not provided the crutch that the dollar has provided to Americans. So, I think that we're uniquely positioned to suffer from a realignment. And to the extent that the euro ends up supplanting the dollar in any meaningful way, that may extend the time that Europe, can postpone its day of reckoning. But from my perspective, the main beneficiary of the movement out of the dollar is not the euro, though the euro's gone up, about 10% this year against the dollar. But gold is up about 28% against the dollar. And so gold is up quite a bit against the euro as well. So I think the real movement is not out of dollars into euros. It's out of dollars and maybe out of euros too into gold. So that is what foreign central banks are buying when they're selling their dollars. And again, maybe some euros too. So I don't see the euro becoming the next reserve currency. Uh, but knocking the dollar off that throne could be helpful to Europe in the short run.
And yeah, sorry. Last question was how about the rest of the world? You mentioned that it will be good for them if the dollar declines or goes away as this from its dominant status.
Yeah.
But and yeah, no, I can see this. But how? But for even for the Chinese and the rest of Asia, who's been like now experimenting with, repatriating supply chains, developing their own banks, replacing SWIFT, all of this. Nonetheless, wouldn't a lot of this chaos emerging out of the US and Europe infect them as well?
I think it will affect them in a positive way. I mean, I think the biggest winners in our trade war are going to be the emerging markets. I think, again, freeing them of the responsibility of supplying the U.S. with goods and loaning it money, I think is going to be a huge uh, tailwind for their economies and their standards of living. I think the world is going to benefit from the end of this relationship because I think it hasn't been symbiotic. I think it's been more parasitic. I think we've lived off the productivity of the rest of the world. And I think without having to support us, I think that just means the rest of the world has a lot more. And if you look at the emerging markets, these are, better, younger demographics. You don't have these older populations that are dependent on government money that it doesn't have. You have people that have, higher savings rates that are more self-reliant, are the rugged individuals that America used to have that are not looking to government for a handout. They're just looking to create their own opportunities and hoping that the government stays out of their way. And so I'm very optimistic about a lot of these countries in Southeast Asia um, and other parts of the world too that will benefit from this. Some of the countries that we're hitting with the highest tariffs are the ones that are going to have the most to gain.
Well, Peter Schiff, thanks so much. And where can people find you?
Yeah, well, if you want to profit from this massive transition out of dollars into gold, into foreign stocks, I mean, you could already see that, right? Gold stocks, GDX is up 80% this year. 80%. Nobody talks about that. People keep talking about what's happened in the AI stocks. Gold and silver stocks are doing better than AI stocks this year. And so we're, heavily weighted into a lot of these stocks in our portfolios and, the strategies we manage. Even if you look at my most conservative equity strategy is the Euro Pacific dividend payer strategy. I have that in separately managed accounts, and I have a mutual fund that people can buy. Euro Pacific DIX, Euro Pacific Dividend Payers Fund, EPDIX. Make sure that's it. Yeah. That's up almost 40% this year. It's up like 39%. That's 4 times the S&P. These are dividend-paying stocks. I'm not buying growth stocks in my dividend payers fund. I'm buying, conservative value-oriented stocks. Yet with the currency appreciation and the flow of funds back out of momentum into defensive conservative value names, you get a 40% return in just over half a year. And of course, I got a gold fund as well. EPGIX is my gold fund, but investors really need to see where the wind is blowing. And believe me, this is going to be a hurricane. There's a lot more wind coming, and get out in front of this. Americans are going to lose a lot in this transition, but Americans and anybody else who invests the right way are going to gain a lot, right? I mean, if you own the assets that are going to be gaining in value, then that's a big windfall. So American assets are going to be marked down, and foreign assets are going to be marked up, along with the dollar being marked down and foreign currencies being marked up. So you need to own these foreign assets, foreign currencies, commodities, gold and silver, mining stocks. Just look back at what worked in the 1970s, because what we're going to go through is, I believe, similar to the 70s, only of a greater order of magnitude. But that's when, in 1971, the U.S. went off the gold standard, and that was a reset. The dollar got marked down by 2/3 against the Deutschmark, the yen, the franc. Gold went from 35 to 850, right? Oil went from $3 to $40, whatever. So, everything got more expensive, and foreign stock markets did great while the U.S. stock market went down. The same dynamic, I think, is going to apply now, only it's not just the U.S. going off the gold standard. It's going to be the world going off the dollar standard. And I think that has even bigger ramifications for exchange rates, gold prices, commodity prices, investment returns. So people should reach out to my advisors at Europac.com. Go to the website, talk to us about how we can bring over your portfolio, how we can manage it to take advantage of what's going to happen and to protect you from what's going to happen. If you're a do-it-yourselfer, when you go to my website, you can get information on my 5 mutual funds and how to buy them no load through your discount brokerage firm. Also, you got to buy gold and silver. Gold's around $3,300. Silver's $38 an ounce. I think these are still very cheap prices, even though they're up quite a bit on the year. They're still cheap. My gold company, Schiff Gold, sells gold and silver. You should buy it if you don't have it. We got great prices, probably the best in the industry. So go to Europac.com, go to SchiffGold.com. You could just buy gold and silver right online, fill out your shopping cart and check out, or I've got specialists standing by to help you, to help guide you in your purchase. And they will not push you into any kind of collectibles, semi-numismatic, proof sets, any of the garbage that so many other gold and silver companies push on their customers because they have incredible markups. Our markups are tiny because we don't deal in any of that nonsense. And so you maximize the amount of gold and silver you get for your money. And so we charge very little. The companies that sell this stuff charge a lot. So a lot of your money ends up in their pockets, not yours. But that won't happen at Schiff Gold.
Well, thanks.
And then follow me on Twitter, or X rather, on my YouTube, and listen to my podcast, The Peter Schiff Show. I do 1 or 2 episodes every week. So people should make a habit of tuning in.
Yeah, I watched that myself. So thanks again.
All right. Take care.
Bye.